I actually don't get how you're at an all-time high in your portfolio. It's impressive. A comment coming from Chris B, and I'm going to tell you right now, from a dollar amount, I'm at an all-time high. Currently in this Monday market rally, the portfolio is worth just over $406,000, which is very impressive, but that's not from a percentage basis. Because I've been cost averaging so aggressively during this market downturn, when the market rallies even a little bit, it's very likely you're going to quickly hit an all-time high. But we have to keep in mind, from a percentage basis, most of that money is only recently added money. It's not as though my portfolio was just sitting there and it immediately went back to all-time highs, which we can see taking a look at the individual accounts themselves. I only have one account that's at all-time highs, and that is my RRSP, and that's because I sold Tesla so aggressively when it was rallying and put all my Tesla money basically into SCHD, a broad-based dividend ETF. But we can see my other accounts, my TFSA, my regular brokerage account represented by the orange, my TFSA is represented by the blue line. They have a little bit farther to go before they'll be back toward the all-time high amount. But in this video, I want to answer some of your questions, some of your comments, offer some clarity around dividend stock investing, how I find individual investments in the broader market discussion. If that's a conversation you'd appreciate, in return, I simply ask that you hit that like button. As the second comment comes from JT Soul. Good video. Kyle, for someone who already owns a bunch of Canadian banks as individual stocks, do you think XEI could be a good alternative to VDY since it's less heavily weighted to financials? Now, VDY is the Vanguard FTSE Canadian High Dividend Yield ETF. I have, as you can see in my portfolio overview, it makes up 37% of my portfolio. I have $151,000 just in this ETF alone, and it is very heavily weighted in financials. We can see that Royal Bank, Toronto Dominion Bank make up over 25% of this entire ETF. It's very concentrated in these upper weighted Canadian banks because they're also the largest companies in Canada. Now, XEI is an interesting counterparty to this. I would only buy XEI if, in your situation, you already owned a lot of Canadian banks. And again, not financial advice. I just think it's a very good counterparty if you're already owning a lot of the exposure to the Canadian financial sector. So XEI, very similar ETF, has a very similar dividend yield, very similar expense ratio. The only problem is over the last 5 years is it has underperformed VDY from a capital gain perspective. And again, that comes to the lack of concentration in financials, which you already have exposure to, because this one is about a 30-30 split between energy and the financial sector. And we can see the top weighted companies are Barrick Gold, Suncor Energy, Enbridge, Canadian Natural Resources, Royal Bank, TELUS, mostly an equal weighted ETF, making each one of these positions right around 5%. I don't think XEI is any worse than VDY depending on your current circumstance. Leading us into the next question here, NB says, thanks for the video. Where do you get your inspiration for your investments? Do you see articles somewhere by chance on a stock like Aduro, or do you just hunt it out in some other way? I'm just wondering how you conduct your research. This is a very convoluted question to answer. Very complicated, so we're going to be exploring this further on my Patreon page. If you're new to my YouTube channel, you want to support me in this endeavor and get more in-depth knowledge, come support me on Patreon. It's $5 a month. It's literally the equivalent of one Starbucks a month, and I think I'm offering 10 times the value than a wasted coffee and wasted caffeine energy. To be honest, I already posted a video there revealing how I make $10,000 a month and the components that make up that income. But let me just try and give you a simple, refined version in this video. So there's two proponents to my investing strategy. This first proponent is something I only recently took on, and that is cost averaging into broad-based index funds like the S&P 500 index, VOO, SCHD, the Schwab US Dividend Equity ETF, and VDY. These ETFs are places where I will not care about the valuations. I will just be putting money in here month over month and just cost average into them, hopefully in perpetuity until I retire. Now, a lot of dividend investors in the dividend investing community will take that same strategy and apply it to really world-renowned dividend stocks. And this is something I used to do. So stocks like McDonald's, Procter & Gamble, Pepsi, Johnson & Johnson, Apple. The problem with this investing strategy is you don't really care about the value you're paying for these individual companies. You just want to keep buying them, get that dividend growth, and hold on to them for 20 or 30 years. The problem with me is I don't like buying a huge portion of my portfolio into 30 or 50 individual stocks because I feel like you're not managing it correctly and you're very likely to underperform the markets doing so. So I like to just focus on the broad-based ETFs. It's going to weight all these stocks like McDonald's and Apple for me. And then over time, if those things go out of waiting or something happens to those companies, I don't have to worry about it because VOO passively manages that for me. However, I still want to outperform the market, and there's only one strategy to do so, and that is picking a handful of individual stocks. The problem is sometimes this process can take actually years to find those, 10x out of the park ball game kind of companies. And you mentioned Aduro Clean Technologies, which is one of the only individual stocks I hold, along with a company called Taiwan Semiconductors. But I want to tell you that it's literally only one of the few companies that I'm willing to put money into, and it's really hard for me to make these decisions. Is over the last several years, there's been 5 or 6 companies that have really made me the vast majority of the gains in my portfolio. For example, MindMed, a psychedelic stock that took me 2 years to come to the conclusion that maybe I should put some money in there. Same thing when you roll all the way back to one of the first stocks I bought being Canopy Growth Corp. I had a thesis around this MJ company that when Canada legalized that market, that a lot of attention would come in and a lot of investment dollars. I was right. I made a small fortune on that investment. Tesla, another one of those companies I invested in 2019, a very different investment thesis. But let's talk about these 2 investments first. Aduro Clean Technologies, this is a company that came to me as a sponsor on this YouTube channel. A lot of people don't like sponsored videos here, but I love rubbing shoulders with companies running 50, 100 million, billion-dollar market cap companies. I think it's really cool. And Aduro, being a company turning waste plastics into fuels, really clicked with me because they operate in my backyard. Their thesis to operation is a much smaller window than a lot of other companies. Within 2 or 3 years, this will play out. They have a partnership with Shell, and the stock has outperformed the S&P 500 over the last year. There's just a lot going right for it. So I put a very small amount of money into this as it's a speculative investment. They do not make cash flow, meaning I'm not going to make like crazy huge money off this, but you put $500 to $1,000 in here, guys, it could easily become $5, $10, or even $15,000 over the next few years. However, for me to make a very large investment into a company, it has to fit a lot of different check boxes, right? So Taiwan Semiconductors is a stock that came to me because I heard Warren Buffett bought it in his Berkshire Hathaway portfolio. Now, I don't understand oil. I don't understand half the stocks Berkshire buys, so they will never, the stars will never align for me on those companies. But I said, hey, why is he buying Taiwan Semiconductors? So we have to ask the questions. What's the size of the company? What's the income, the cash flow? What's the price to earnings multiple? What am I paying for that cash flow? What's the dividend yield? How much is that dividend growing year over year? What's the industry look like? What are people saying about it? What are influencers saying about it? Meet Kevin bought this in his pricing power ETF. I'm seeing articles like chips are the new oil and America is spending billions to safeguard its supply. What kind of moat does this company have compared to its competitor? When you're going through these check boxes, a lot of them said yes, 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 yes. I could hardly find negatives about this company at the current valuation it trades for. So for me, I said I could buy this today and it'd be a company I'd be very happy with, because when I compare it to what everyone talks about, like Apple, like Amazon, like Google, like even Facebook, I think this is just the better buying opportunity for me. So that's why I loaded the boat on this company, and it's proving to be fairly fruitful in the short term, but I do want to see my thesis play out over the next 3 to 5 years, because I believe this is a company that if it disappeared tomorrow, it would greatly hinder the way the entire economy functions. So we're going to explore the theses and the box I have to check to come to these conclusions way more in depthly on my Patreon. So please come support me there. We're going to start doing live streams toward this weekend, but I'm going to finish up with one more comment here from Jason, who says, watched and liked. Thanks, Kyle. This is an OG subscriber who said, didn't you sell Riocan, the Riocan, one of my favorite investments. Did you watch the Madoff series on Netflix? So 2 questions here. Firstly, yes, I sold Riocan. That conclusion was because my fiance has a large percentage of her portfolio already in the Riocan REIT. I still love the REIT. I'm still going to be breaking it down on this channel, but I wanted to divest our portfolios and not so overly concentrate in a stock that historically has underperformed the general market. It is an income-focused stock. It's great for generating dividends, but not growth. So I took that money, I put it into my TFSA, and that is where I came to that conclusion that I thought Taiwan Semiconductors would have been a better buying opportunity, so we can divest instead of having so much concentration in Riocan. Again, I don't talk about the portfolios combined of my fiance's and mine. She likes to keep her stuff private. Now, did you watch Madoff, the series on Netflix? Because of you, I did. This very comment, we watched it over the weekend. It was absolutely incredible. I recommend everyone watches it. It's very reminiscent of the Ponzi pump and dump schemes games going on today. It's very reminiscent of FTX, Sam Bankman fraud that's hopefully going to go to jail, as Bernie Madoff got sentenced for over 100 years for running a $60 billion fraud over 20 years. It's kind of wild to think. Go check it out. Some recommendations, some entertainment value toward the end of this video. But I'll pass the question off to you. Let me know what you guys think so we can do further Q&As.